to the big fund that we're going to review this week. So before I go across to Dhiren and ask him what his view is of the DSP Blackrock Tiger Fund, Avan joins us now to give us a quick introduction into what this fund is about. Avan.
Making stellar returns when the markets are holding up is no great feat for a mutual fund. But only when there's a dash of volatility in the markets and the bears take charge does the true strength of a fund emerge. And here's a fund which passes the test with flying colours. The DSP Blackrock Tiger Fund. And don't worry, it's got nothing to do with wildlife. TIGER stands for the Infrastructure Growth and Economic Reforms Fund. As I mentioned, the fund's charm lies in its ability to protect the downside, which it did most recently in the first quarter of 2009, when the category average was minus 5.32% and the fund managed to stay in the positive territory with a return of 0.49%. But this fund has not disappointed during the bull runs either. Its annual returns have been on par with its category average. The fund has maximum exposure to energy and financials. There's also been a gradual rise in construction. Capital goods and engineering stocks have been pulled off the table due to stretched valuations and moving tactically towards telecom. But do the numbers reflect similar optimism? If you invested 1,000 rupees in this fund when it started, you would have 4,678 rupees today. But let's get down to it and tell you if this is the next fund for your portfolio.
So the DSP Blackrock Tiger Fund, Dhiren, good return, stable fund management. Would you say this is a good infrastructure fund to invest in?
Yes, it is a good infrastructure fund. To invest in or not is a worry because, I keep suggesting that investors are better off with a mainstream fund, a fund which can invest anywhere. And when you are choosing a fund and if you want to keep it simple, then why not be with something which is generic? But if you're frozen on choosing an infrastructure fund, which is then it can well be a choice.
But if we compare this fund to the other infrastructure funds that we have in the market right now, how does it stack up against its competition?
It stacks up reasonably. It stacks up as an average and on occasion above average fund. In fact, 2007, this fund, when the going was good for infrastructure, this was a blockbuster. But I don't think it has been a blockbuster ever since.
You did mention the fact that this infrastructure was a buzzword a couple of years ago. It has gone out of favor slightly. But we do know that an infrastructure fund is a very loosely defined fund. It's everything except IT and FMCG. So what is your particular take on where we might see this sector move in the next couple of years? Do you think it will come back in favor at any point?
Yes, actually infrastructure is almost a quasi-diversified fund. You rightly said that it's a normal fund excluding FMCG, IT and pharma. So I don't think it's you are eliminating a big part of the market. But I would say that here a fund manager's ability to add value goes up. His preferences, his timing, his instincts, I think they can make a difference. And when the going gets good, I think this fund looked very impressive then in 2007 and 2006. It was ahead of the pack among infrastructure stocks. So I would say that it has to its credit some past laurels, but as of now, this is a kind of fund which shouldn't be the first choice of for an investor's portfolio. But if you want to look for an infrastructure fund, this can well fit the bill.
All right, Dhiren, let's put it in a nutshell for viewers who are watching right now. Good, bad, average, the DSP Blackrock Tiger Fund, should we be investing in it?
An average fund. As a generic choice, and even today, 2.5 years of a struggle for the infrastructure fund, even among infrastructure fund, I would say it's proving to be an average fund as of now.